What's up, YouTube? Welcome back. So we are recording, not streaming, just making sure. In this video, we're going to go over the stock market expected move for the week. I'll kind of give you my opinion, I guess, as we go. These videos, again, short and sweet, but we look at the options chain, see where market makers are pricing and risk, see where the algos need to start hedging. Should we get outside these levels, you'll see delta hedging, and you'll see last week just how things panned out because we got outside that move. And to paint this picture, because we're going to get outside the one standard deviation. Now, inside this standard deviation, we have everything accounted for, right? So you buy your calls or your puts, and then the market maker, to maintain a neutral delta, needs to grab shares against that. That's typically how shares are bought. Mostly it's all a hedging game, and you guys know that. Whether they use shares or futures, it's just to maintain a neutral delta. The market maker is, and we use this a lot. Oh, the market makers got me. There are market influencers. There are people that have a lot of money that's just what moves the markets. More buyers it goes up, more sellers it goes down. It doesn't matter if the whole world bought $1 or if one person with 7 billion just went ahead and bought in. When the buyers came in, less sellers, it would just push up. They would buy that order book. So that's what we're seeing going on. These are not support and resistance levels, but to paint that picture, imagine we get outside this standard deviation and there's a market maker out there and he's thinking, okay, do I want to be lazy or do I got to start hedging? Do I got to start doing work? So at that point, they're either reining it back in, hey, get back in line, we were prepared for this, or we got to start hedging and we're prepared for that second standard deviation. So if we look at last week real quick, you'll see we actually got outside. Now, I already took a trade. At the end of every week, so every Friday, I take a trade. This one was actually $38. We're about to add that on here. I sell iron converts just outside. Now, this particular one, I was talking about the put side. This was in my mentorship group. I was like, guys, this is where I was at. I had sold the 386 puts, bought the 384, so it was a $2 spread. I did the same thing up here. Obviously, nothing to worry about. And man, right inside here, it's like, were we really? I took the chance. I actually added on to this. Now, this is actually inside my bot. There's a trade bot that I have that does all this for me. But what I started doing to spice things up is when we get the really red days, I sell even more. I sell another put spread. We get the really green days, I sell another call spread. And what that has done is just effectively just add nitrous to the whole trade. So far, has not taken any losses. I've done that. I do not add those onto here though. So just to keep the bot in line, I guess. The extra added trades are not added into the bot just yet, if that makes sense. It's an addition coming in. As soon as I can automate that and figure out what I think is consistent, and just like I did with this trade, I took this trade many weeks long before the bot was ever created. Which is one I manually did. Now it just does for me. So you see all these numbers here. So we're going to grab the expected move. But so look, we actually bounced, got outside, came back in, got outside, went for it, almost went to that 2 standard deviations. Sometimes when we get out here, this is just where volatility comes in. Okay, I don't care about the VIX. I don't care about your feelers. Volatility. Are we going to just rein things back in, which in my experience, it's a number I made up in my head. I think 80% chance we rein things back in, 20% chance we get wild and we go to 2. You can see we held here, like reined it back in, went for it. So like Monday, Tuesday, Wednesday, Thursday, like we took one day to just cover that, what we did the whole beginning of the week. But then miraculous, boom, recovers. We get the bounce. The S&P hits bear market territory. It officially crashed the 20% for like a minute, and we bounced back up and we closed inside this move. Another beautiful thing about options. But what that did was crank things up, so we are making even more money in this next trade. By the way, every one of these is risking $200. So $200, I'm collecting that. So I collected again that same amount here. We take that loss. It's, we're losing that amount again. Let's grab the expected moves real quick. Hang on. Amazon 132 and 73. 132, 73. Amazon. I want to start charting these out. I want to see just how efficient Amazon and Tesla can be. I know I can back test, but I don't trust any of that stuff. TOS is horrible at back testing anyway. There's a bunch of flaws in there. So I like to just watch it, get a feel for it, and see if there's anything I need to pick up on when I'm watching it. See how we interact when we get outside these levels. The more volume it is, the more efficient you will see. Again, this is taking data from all the options trades that were placed because that's what they're hedging against. Alright, Tesla was 70. I hear my dog barking. It really just made me lose my train of thought. Tesla was 73. Now that dropped out, hit that 2 standard deviation, and came back. Not a full recovery, though. Oh my gosh, come on. There we go. Close enough. We'll fudge it a little bit here. Alright, let's save that. Tesla needs to get above that. Are we above that after? Let's see. Getting above that zone, I'll be bullish Tesla. And I gotta say, there is an investment conversation coming up on, not sure what channel I'll do it on. It might be on the Don Franz show. I'm going to talk about mine. I've sold a lot of stuff that's been in my investment account. And going forward at the dip, long story short, I don't want to be spread out. I don't like getting spread out. There's a lot of things I just thought were good deals. I bought them. I made money on a bunch. Some I had to dig my way out of, which is worth its own conversation. But I'm going to be very selective, and I'm going to just go hard. The one thing about diversifying is you just almost guarantee a loss. You know, you have so many eggs in all the baskets, you're just going to, you're just bound to have multiple losers. Not a fan of that. Okay, so IWM, let's burn through these. 732, QQQ, 1332, SPY, 1353. Let's go back to that. IWM, 732. How'd you guys do last week? Also, aside from some things I heard, I didn't look into it. I heard Powell brought up 0.75 back on the books. I didn't hear him say that. Somebody else was saying that. He said it on some radio. I don't know about that. If that were the case, I'd say we're probably going to open up. Well, let's see if we open up red. I was on board and actually swung bullish over the weekend. But you know what well, at least you know what I say. You can't make a bear flag without a green candle. And the market is just very, I don't want to say oversold. Those are some call spreads that I sold. They were just fine. Alright, 1332. Well, at least we're pricing in a higher low. Hopefully this week isn't like a doji week and the next week we're bullish. I kind of want, yeah, if that. Like, it's about time for like, now we might just be, these green candles could be just like these other green candles followed by red. The trend is still down. I caught this knife. I'm green on some things. I'm up, I think, $1,200 on an Amazon position, so I decided to swing that. It's just one Amazon call. Amazon, Tesla, added on to Ford, added on to Facebook. I do actually have some SPY calls. So I'll have some digging out to do if we do gap down and open up red. But I'll have no problem getting back in short. I kind of just feel, I don't know, dead cat bounce, shorts covering. That's probably what most of this has been, shorts covering. The thing is, what we saw on a lot of on Flow was a bunch of sold puts. Now, the argument between that is, did they sell those to open or did they sell a very green position? Because that's the two sides of the coin. Selling to open, puts were very juiced up. At that point, I love selling those puts because it's a frenzy. Everybody's buying them and they're just paying that premium, and I will take that because anything sideways or even up smokes those things. So it's never a home run play, but it's almost like free money, and I hate to say that on the internet. But if you halfway know what you're doing, it's hard not to make money on those. Now, I'm selling to the Wall Street bets kids, the people I'm selling out of the money. I'm not getting crazy with anything. There was one time I sold in the money calls. Was Lucid pushed up. I sold some 25 calls. It was like 30. It was amazing because then it dropped off a cliff and they expired worthless. So I sold, got to keep all that money. I don't know. That being said, so two sides of the coin. They bought puts a while back, sold them just now, and they're about to hammer some puts after a push up like this because on green days puts get cheaper. Or they sold to open and they're just going to let those play out and then jump back in. Or this is the bottom and we're going to the top. But I would argue if you've said that now, you probably said that along the way and your account's down. Probably a decent amount. No need to fight the trend. The trend is still down. Technically, it's 13.53. I don't know. Know your lane. It's more important, I guess, that you stay in your lane. Are you a fight the trend kind of guy? Or are you a go with the trend, kick your feet up on the desk kind of guy? Or are you so stuck in your ways, you were bearish the whole push up and now you're finally making some money back? I don't know. There's just bears that are just bearish non-stop. They're finally getting some breathing room, I guess. I don't know how you put in that. But then same people that are stuck in the bullish way. Let me ask you guys this. If you're just so bullish all the time, what do you do when the market crashes? Just take that beat down and then restart? That's what your 401 does that, not your trading account. Something I talk about in my mentorship group a lot is I don't have a directional bias, I have an income bias. Start working things from that angle, and I promise you'll be short some red candles and long some green candles, and it will just work wonders. For some reason, people just have this mental block, and they can't short things. I don't know if their brain doesn't let them. I'm not even making fun of anybody. Do they just not know? Do they not feel comfortable with it? It's weird how many people just have this block with shorting. Like, I don't get it. I can sell and buy back cheaper and then make money, and little brains are gonna explode. But they finally do it and like, holy cow. What I had in my last conversation was mentally just picture this. Turn your monitor sideways. Just flip it counterclockwise, right? If it's going to the right, click the red to open. If it's going to the left, click the green to open. What if that was this whole entire game? It'd be a whole lot easier. Now you're just playing Pong. Well, it looks like it's headed that way. I'm going to go ahead and click the red to open. Headed to the left, go ahead and click the green to open. Alright, so those are our moves. You might notice with this, there's a purple line here, and we happen to bounce. Unfortunately, that is something, I usually delete that off the videos. That is proprietary just to my group. You can ask one of my mentees what that purple line is, but it typically doesn't fail. Oh, well, it doesn't fail. It's a very significant line. If you're going to trade the spaghetti lines, there's only one I would trade, and that is it. Alright, I'm going to end it here. I'm going to go live 1 hour after futures open tomorrow on the Don Franz Show, so make sure you're subscribed to both channels. As always, like the links are in the description. The Teachable link is if you get the trading suite that does come with the mentorship, it's all for life now. Yeah, I'll see you guys in the next video.